Talk to us a little bit about what changed for you this morning. This was the news on this vaccine we've pretty much been waiting all year for. Does this change anything for you now going forward?
Well, I think that the election results, what you're talking about, the election results? Sorry.
Yeah, we can go right there. Both the vaccine and then, of course, the election.
I'm sorry, the vaccine.
Results.
I'm sorry, I misunderstood you. Well, the vaccine results from Pfizer are quite encouraging, obviously. Have 90% success rate is quite high for a vaccine, certainly at this stage. So I think that's obviously propelled the markets forward. And I suspect that other companies that are coming forward with vaccines will have similarly high results. So that's very encouraging. But we have to recognize, without putting a damper on this very good news, that by the time you get the vaccines into the market and have them widely distributed, it's going to take several quarters. So I don't think that it's going to be in the first quarter that everybody will be vaccinated. And we have to overcome the concern that some people have about taking a vaccine for a variety of reasons. People don't like to take vaccines, or they've been worried about this particular vaccine. So the Pfizer news is great. I hope other companies that are working on it will also have similarly good news. And so I can understand why the markets were quite happy with this.
Markets also pretty happy with what's happening in terms of potential gridlock. Do you see it that way, David?
Yes. I do think that the markets, markets like several things. They like certainty, and we think we have certainty now, but they also don't like anybody to be so in control that something can be jammed through one part of the Congress or one part of the administration. So the fact that you're likely to have a Republican, not certain, but likely to have a Republican Senate, likely to have a slightly less Democratic House, and are likely to have a Democratic president gives the market some comfort that nothing will get done that is too precipitous. Now, if you're on the left side of the Democratic Party, you might not like that. If you're on the right side of the Republican Party, you might not like that. But the markets certainly seem to like that.
And so the one thing, though, that Biden and every president has here, David, they do have a certain regulatory power where they don't necessarily need to go to Congress to put in place what they may think are rules and regulations that they see as necessary. Are you concerned at all about the potential regulatory changes that a Biden presidency might bring, and whether that could have an effect here on what the markets are expecting?
Well, I think what we've learned in recent years is that whatever regulatory action a president takes is likely to be subject to some litigation. So it's very unlikely that President-elect Biden, assuming he is, sworn in, and as I expect he will be, that it's unlikely that he can do something so out of the expectations of norm that people will not sue. So I think that there will be litigation. So it's not as easy to just do executive orders and get things implemented, though executive orders have become increasingly popular, as well as have signing statements with legislation, which often say the presidents aren't going to do exactly what the legislation says they're going to do. So there's no doubt that President-elect Biden will likely implement a number of things quite quickly. And I think they have a long list of things they want to do to reverse some of the things that President Trump did by executive order. So I suspect that's the world we're going to live in for quite some time.
I'm curious about how you're thinking about the fundraising environment with public equity markets, again, rallying today. There's a lot of concerns that maybe there are some opportunities in the private market, and it was shifting valuations to overinflating the private market. Where are we on public versus private market valuations now?
There's no doubt for the last couple of years that private valuations have been high compared to more traditional standards, and public markets have been pretty high, too. So people just have to get comfortable with the fact that buying things in the buyout world for 7, 8, and 9 times cash flow is probably a thing of the past for the foreseeable future. And people are paying lower double-digit cash flow numbers. And I suspect that is going to continue for some time. One of the reasons is you can borrow money for very little price. Interest rates are so low, so it makes it relatively inexpensive to borrow money, and therefore a lot cheaper to pay slightly higher prices than you would normally want to pay. If interest rates were to go up again, that would be a different situation.
David, I'm interested in your international perspective right now in terms of, is the opportunity right here, right now in the US? Is it abroad, particularly if we've got a new world, a new order in terms of international relations from here on out, potentially?
Well, without doubt, the greatest place in the world to invest for private equity, and I think public equity, is the United States because the rule of law, transparency, quality of managers, quality exit opportunities, all the things that we know. But I think outside the United States, there's some terrific opportunities now in China. I think China is had a rebounding in its economy, and I think India is quite attractive as well. I think Europe is also very attractive because the Europeans have to deal with the virus as we do, but I do think there are a lot of very attractive opportunities in Europe as well, particularly in the technology sector, which has often been overlooked a bit in Europe. So I am pretty bullish on some of the opportunities as we go forward. I do think that the new regime in Washington, D.C. will be more favorable to investments than maybe people might have thought before, because, again, no one part of either party is going to be able to dominate, and therefore I do think you're going to get compromises, and I think markets generally will like that.
Well, then talk to us about, I guess, the leadership challenge here for Biden to sort of facilitate some of those compromises, assuming he is sworn in on January 20th. What exactly do you think, I guess, is sort of the secret here to navigate a political environment that, at least right now, still seems to be incredibly fractured?
Well, and right now it looks a little fragile for sure, but I think as time goes forward, I think it'll be clear that the president-elect has a reservoir of goodwill in the Senate. He was there for almost 40 years and knows a lot of people are still there. He has a very good relationship with Mitch McConnell. So I think that will help him a great deal. I do think as well in the House of Representatives, he has some very good relationships because he's done a lot of work there over the years. So I do think he will get off to a reasonably strong start. I think his transition team has been planning for this for quite some time. And while they didn't obviously know the outcome of the election, I think they felt that they needed to be well prepared. Presidential transitions are very important these days. And it used to be that virtually nothing was done in the presidential transition. Even when John Kennedy was elected, virtually nothing was done before the election to plan for the transition. And the transition mostly consisted of President-elect Kennedy working out of his homes in Palm Beach and Washington, D.C. with no staff. Now we have legislation that allows each side to have staff, and the new team coming in is paid for by the federal government to some extent and has office space, and that'll get done, I think, in the near future.